analysis and analysis for trading when it comes to trading stocks or crypto. Okay, these are the very fundamentals that you have to innately understand if you want to succeed with trading. This is the meat and potatoes of trading. It's the absolute basics. So my recommendation is get out a notebook, grab a pen or a pencil, and make sure you take some notes so you really can digest this information. You need to understand this to move forward with the course, okay? So I have the presentation ready to go. So grab the pencil, grab the notebook, and I'm gonna turn off this camera real quick. Very good. And let's get started. So we are going to be talking about candlesticks, okay? And why do we use candlesticks? And candlesticks are the bars that you guys see on all of the price charts that we're viewing in the community or that you may have seen in the past. And those bars are, they're candlesticks. And I'm going to give you guys a little bit of a history of the candlesticks, why we're using them and what they mean. So number one, we're using Japanese candlesticks, and they focus on the open and the close of a bar, okay? And we have to remember that when we're looking at a candlestick, that represents a time frame. So we're looking at the open of that time frame and then the close of that time frame. It's going to make a little bit more sense in a second here. So Japanese candlesticks, what they present is they show a graphic representation of the supply and demand for each time period's price action. And we have to remember that's how a market operates. It operates off supply and demand. Supply meaning the sellers, and demand meaning the buyers. Okay, that's how a market functions. There has to be buyers and there has to be sellers. And obviously, if there's more buyers than sellers, then the price is going to go up. And if there's more sellers than buyers, the price is going to go down. This is how a market functions. Okay, and candlesticks, they give us a representation of that, supply and demand of those buyers versus the sellers, okay? And maybe a lot of you guys have seen bar charts and versus candlesticks, or maybe you guys have seen like Heikin-Ashi candlesticks. I always 100% recommend Japanese candlesticks, which are just the regular candlesticks on TradingView or whatever platform that you guys are using. They're way more visual. They give you a very clear picture on the price action that's occurring. And like I said, they emphasize the relationship between supply and demand. Okay, if we understand the supply and demand of what we're looking at, of the stock or crypto that we're looking at, then we could take advantage, of that supply and demand and make a profit. That's the whole point. And that battle between the buyers and the sellers, right? This supply and demand element that I'm talking about, it's the most important part of technical analysis. This is what makes technical analysis. That's why it's so crucial for you guys to really pay attention and understand how to read these candlesticks. So how are they formed, right? And depending on which time frame you're looking at, a candlestick represents the price action that occurred during that time. So if we're looking at a 5-minute chart, right? Each candlestick on that chart represents 5 minutes worth of time, right? So for example, we talked about kind of the open and close of the candlestick. Let's say it's 10 a.m., right? And a 5-minute candle started forming. At 10 a.m., the candle, obviously the 5-minute candle started forming, and then at 10:05, the candle stopped forming. And then the next candle started forming at 10:05, and then at 10:10, that one closed, and then another one starts forming. So you can see that every candlestick represents, a unit of time. And obviously on 15-minute charts, every candlestick represents 15 minutes worth of time. And on daily charts, every candlestick represents 1 day's worth of time. You guys get the idea. And if you're asking yourself, why are we looking at different time frames? I'm going to be talking about that later in the course, but it's very important that we're looking at several time frames and reading the candlesticks that are on several different time frames. And we're going to get into that a little bit later in the course. So let's start with the absolute basics on how to read candlesticks. Like I said before, candlesticks emphasize the open and the close of a bar, right? So if it's a green candlestick, that means price went up in that time frame, right? In that candlestick's time frame. So if it's a 5-minute chart, that means price went up in that 5 minutes. If it's a 15-minute chart, price went up during those 15 minutes, okay? So the bottom of the candle, or the body of the candle, this is known as the body. The bottom of it is where price opened. The top of it is where price closed, right? And these little lines here, you can call them wicks or tails. They represent the absolute lows during that time right here. And the upper wick represents the absolute highs of price during that candle, during that candle's time. Okay, so if it's green, and obviously it closed higher than it opened. So that's why this is where it's closing, this is where it's opening. And the wicks, like I said, highs and lows. If it's a red candle, that means it opened at a higher price than it closed, right? That means it went down during that time frame. So it closed at a lower price than which it opened. These wicks, they represent the same thing, the absolute highs of that candlestick and the absolute lows of the candlestick right here. Okay, so if it's red, it went up. Oh, I'm sorry, if it's red, it went down. If it's green, it went up. Okay, and the one question we always have to be asking ourselves here is, who won the battle? The buyers or the sellers? Okay, so let's look at this diagram to have a better understanding of what different candlesticks mean and how different candlesticks can form. So first and foremost, we have this is called a wide range bar, and this is one example where the candle opened at this price and closed at the absolute highs up here. If you guys see, there's no tails, right? There's no wicks, meaning it opened at the absolute lows and it closed at the absolute highs. That's why we don't have any tails. This is a very bullish candle. Remember, bullish means indicative of strength, meaning there's a lot of buyers. So this is a buyer heavy or buyer